Hello guys, welcome back to another trading concepts video after a very long wait. Today we have something different, something more interesting for you guys. While many traders primarily focus on various price action concepts, after years of trading with different strategies, I've realized that time is as important as price, if not more. And when combined with concepts like the power of 3 or AMD, your clarity and anticipation of the markets will be even more solid. And in today's video, we'll talk about kill zones and the times of the days when the market is most volatile or liquid. So, what are kill zones actually? Kill zones are designated periods of time in the currency market where the trade volume and the volatility are at their highest, offering the best trading conditions. Kill zones concentrate on times when major institutional activities drive prices, like during session overlaps and during our regular trading sessions, like in Sydney or Tokyo, which we call the Asian sessions, or like in London or New York. As we know, not every hour of the day has the same prospects because of the forex market being open for 24 hours a day. Traders may profit from robust market trends and steer clear of times of liquidity where it's low by concentrating on particular kill zones. Kill zones are important because they offer optimum times to enter and exit the market, have higher volatility, which results in more robust price action, and have obvious institutional influence operating during these hours, which shapes the trend. So, what is really the importance of kill zones? We'll go more in depth about why do we actually focus so much on time and kill zones in particular. Increased volatility. As we know, kill zones usually coincide with significant news announcements and the start of financial markets in places like Tokyo, New York, and London. Significantly increasing the volatility during these times is the surge of orders from huge institutions. As a result, you can profit from larger price changes. More liquidity. So the market liquidity is typically stronger during these times since the market making algorithms are active. You will get how more liquidity, lower spreads, and slippage have a benefit on your trading if you have enough trading expertise. Predictable patterns. So, historical data and market behavior is something that we can identify and we can shape what particular kill zones that we actually need to focus on. Some recurrent concepts and patterns like the Judas swing or the power of 3 are predictable during particular periods of time. Economic data news release. Economic data news releases are common during kill zones. Almost all traders know that news releases may be used to create profitable trading environments and are the primary drivers of market movements towards specific liquidity zones. Market reversal and continuation. So, when the market reversals or continuations take place, kill zones usually follow. By looking at the charts during kill zones, you can identify common trade configurations and you can see the particular time zones where the reversals and continuation occur over and over again. This is something that I like the most about having kill zones, which is the over trading cure. So, by trading only during the kill zone times, you can focus on specific times of the day. We are all aware that spending all day staring at the charts might cause someone to become emotional and make irrational choices or to overtrade. So, what kill zones do is that they provide us a specific time zone or a time period where we have to focus on the charts because that are the time periods which will have the most movement, volatility, and liquidity. So, we'll discuss the types of kill zones that we have. We see four specific kill zones during a 24-hour cycle in the market. Remember, all the times that we discussed are calibrated according to the UTC 4 or UTC 5 Eastern Standard Time, depending on the daylight saving settings. So, And each time we are discussing any kill zone, we are talking about the time in a 24-hour format. So the first one being the Asian session, which extends from 20 hours to midnight, which is the 0000 hours. At the end of the Asian session, we have the midnight open as well at 0000 hours. The next is the London Open session. So the London Open kill zone starts from the 0100 hours to 0500 hours. Calibrating the New York Market Open, we have the New York Open kill zone which starts from the 0700 to the 1000 hours. And overlapping with the New York Open kill zone, we have the London Close kill zone which is from the 1000 hours to the 1200 hours. The Asian kill zone occurring between 2000 hours to 0000 hours Eastern Standard Time is a key period for identifying trade opportunities and understanding market structure. The key characteristics include during this time, the market usually establishes a very narrow range. Stop orders are frequently swept by price above and below the range, trapping traders. Important maneuvers in the London open kill zones are preceded by these stop hunts. Though short-term retracements can also yield an entry, the greater time frame bias is really helpful. The Asian session can give trades with a scalp of 15 to 20 pips, but is often less appealing to the traders because of its low liquidity and volatility. Due to the US dollars consolidation, usually during this period, the majority of trade setups take place in cross pairs, like in USD JPY pairs or in odd pairs or NZ pairs. Even we can see a lot of movement in gold and oil. A move that goes above the 30 pip range may cause the session to be prolonged excessively. Thus, future sessions Thus, in the future sessions, like in the following London or the New York session, we need to be more cautious. Here we can see the Aussie chart on the hourly, and we clearly have a very narrow ranging price action across 2 days. So we have the Monday price action here and the Tuesday price action here, followed by the Wednesday price action where we see a wick piercing these lows and this ranging price action in the Asian session. We have marked out the midnight open as well as all the sessions that we follow on Tuesday and Wednesday. And here we have the Monday lows. So we have swept the Monday lows respecting our Monday range play that we have along, and we have calibrated it with the Asian kill zone that we use to take on trades. As we discussed, pairs like AU, NZ and other JPY pairs show good volatility and chances of setups being formed inside the Asian session. The London kill zone occurs between 100 hours to 0500 Eastern Standard Time, offering high probability trading opportunities. This period overlaps more or less with the Asian session, allowing traders to exploit liquidity buildups and stop orders placed around the Asian sessions and lows. Key characteristics include breakouts and manipulation of liquidity are frequent. Stop hunts result from overlap with the Asian session's conclusion. It's perfect for trading because it has the largest trading volume of any session. The most active and clearly trending pairs are EU and GU. Leads to directional trades that are often 30 to 40 pips. The day's high or the low may ideally form during these times. The next London session may be skipped if the Asian session was overextended, as we discussed while talking about the Asian kill zone as well. That if we see a 30-40 pip move during the Asian session, it'll be more smart to just sit out during that following London session. Here we have the EU chart, which depicts probable price action in London open kill zone. As we can see, we had a tight narrow range formed during the Asian session, showing price accumulation which was followed by a manipulation taking out the Asian lows. And that particular manipulation pushes the price higher towards a draw on liquidity. As we can see, the London Open kill zone confirms that this is the low of the day and price has continued to move higher on from this particular point. We obviously had a sweep inside a bullish 1 hour order block and we have marked out all our particular kill zones here. The New York kill zone runs from 0800 hours to 1000 hours Eastern Standard Time, with the most volatile period occurring during its overlap with the London close session from the 1000 hours to the 1200 hours Eastern Standard Time. During this period, price action either confirms or reverses the trend set in the London session. It is characterized by stop hunting around the highs and the lows of the London session or the continuation of the high or the low that was generated during the London session. That results into two favorable and probable outcomes that we have forming in the London session and followed on in the New York session. We might have a reversal and a continuation type of a setup. Breaks in important structural levels could indicate changes in the direction of the market, which is highly probable in a New York session. High market activity and abrupt price swings are caused due to the overlap of sessions, especially in the USD based currency pairs, gold and oil. In response to significant releases of US economic data such as the GDP, inflation, and non farm payrolls, institutions utilize this session to take advantage of the liquidity at session highs and lows. This session usually leads to a 50 pip plus move. The next New York session might be skipped if we have a overextended London session. So we'll go and look at a few examples. We have two examples of the types of price action that we might see in the New York session. The first one being the reversal price action. Here we can see on the SPX CFD chart that we have a strong accumulation across the Asian and London Open kill zone, which was followed by a double sweep taking out these London lows as well as the lows from the previous day. This is a prime example of reversal price action in New York session. As we can see, the price has taken out the lows twice and given us a shift in market structure, satisfying all our entry criteria and eventually moving towards our targets here. The second example shows continuation price action in the New York session. As we can see, we had an accumulating Asian session here, which was swept inside the Asian kill zone itself here, pushing price higher in the London Open kill zone, and price more or less went higher and accumulated. Here we can clearly see that the price respected the order flow on the hourly and gave us a turtle soup entry below these lows inside the 4-hour fair value gap, pushing higher towards our designated targets. Again, that's all for today's concept video. I will again end this video by saying the same old boring thing. Just keep on believing in the process and let time do the heavy lifting. We talked about kill zones in this video and we have a detailed discussion on session profiles coming up in the next video that will be uploaded soon, most probably in the coming first half of the week. If you gain some alpha or any important concepts from this video, please make sure to go like and subscribe. Leave your suggestions down in the comments and tell me which concept should I go for next and how I can improve my explanations or videos in general. Make sure to join my Discord and check out all my socials mentioned in the bio to stay constantly updated. Till then, stay safe, happy trading, bye.